You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate and co-living expert, Johnny Wolff. Now, Johnny is the CEO and founder of HomeRoom Co-Living, one of the fastest-growing co-living companies in the U.S. After starting his career as a financial analyst in Silicon Valley, he relocated to Austin, Texas to pursue real estate investing full-time. His love for real estate investing, he's been investing since 2008, and also living with roommates, which he's been doing since 2002, motivated him to start HomeRoom back in 2017. And in 2020, HomeRoom boasted 99% on-time rent payments, full occupancy, and zero evictions. Sales velocity for HomeRoom is up nearly 300% in 2021 with hundreds of happy residents across 23 cities and 3 states. And so, guys, without further ado, I'd like to welcome Johnny Wolff here to the show. Johnny, how you doing, my friend?
Doing great. Great to be here.
Yeah. Thanks for joining us here today, and very interested to learn about your business model. I know co-living is it's not old, but it's not new either, right? It's been around for a number of years, but it seems like it's gaining traction, and there's multiple different companies, even some larger institutions that are in this space. And so really excited to kind of dissect the business model, learn exactly how you guys are playing in that space. But before we do, maybe take a few moments and just tell our listeners a little bit more about yourself. I gave you a brief bio, but maybe fill in some of the blanks and ultimately tell us, how you got started, how you found your way into this niche of real estate.
Sure. Happy to do it. So yeah, you did, touched on kind of the broad strokes, but one of the things that I don't really include in my bio is that I actually living with roommates is my favorite way to live. I think a lot of folks in the 18 to 34 age demographic today, they're not getting married anymore in that age timeframe. So we don't have a proper term for that life phase yet. We just call them tweeners at HomeRoom. But generally, folks enjoy living with other people. I think that's the default mode where people, when they're younger, up to 18 years old, they're living with their family. And then traditionally they would go on to get married pretty quickly. But now we have this massive 20 million person group that actually is living either alone or with roommates. So I've always been a roommate guy. I lived alone in an apartment on 6th Street in Austin for 1 year. And I was like, this is terrible. I can't go home and, hang out with my friends, watch TV with them, go hang out at the pool. Right. So it's just me. This is not, what I want to come home to. So that kind of passion for communal living, I think affordability is really what I really love about roommate living, but it's the community that kind of makes it special, right? And that both of those amenities are hard to compete with any other asset class. Mm-hmm. You get to have friends that you live with, and you get to pay 30 or 40% less in rent than you want with a studio apartment. So all that is sort of how I grew up in the Silicon Valley early in my career, and those are the things that appealed to me about that lifestyle, and those are kind of what drove me to eventually start HomeRoom.
I know that you also, I was reading through your bio, you also had an interesting Craigslist experience with a roommate. So tell me about that. Was that really the big catalyst to start this business model?
Yeah. In 2015, when I was in Austin, I actually was renting out by the room. I was kind of living, I'd lived with roommates in the Bay Area. I could never afford a home there. And so then when I moved to Austin, I was buying houses and turning them into roommate houses. So there's a lot of people doing that. Bigger Pockets calls them house hackers. It's a great strategy. But when I moved to Kansas City to do that in 2018, I just had enough Craigslist. I had there was a very awkward encounter with someone at their house in which I felt sort of trapped in their basement. And I was like, this can't be the solution for all the people that are in this age range that want to live with roommates. So that is actually what catalyzed the idea.
Good deal. So just from a higher level, again, I think we all can just by the name itself, we can kind of get a general idea of what co-living is, right? Living with other folks, living with roommates, 3-bedroom home. Maybe there's 3 roommates, each one renting an individual room. Are there other aspects of it that we need to understand just to get a general premise of that business model?
Sure. We call it roommate living with luxury apartment amenities or
Mm-hmm.
concierge experience. So typically co-living across the United States, everyone does a few key things, or more or less on a majority of folks. They do cleaning of some kind on a regular basis. So a couple times a month or one time a month. They'll usually do yard care, exterior care of some kinds. And then the thing that is, unique to the roommate experience is they take A-class apartment amenities, which is like a lot of community engagement. I used to live on 6th Street in Austin at that apartment, and they had like wine mixers. They had, really cool engagement across online platforms. And so with HomeRoom, we've taken a lot of that. We built our own app. And so people can actually engage across cities, across houses. And so that instead of just having 5 roommates at HomeRoom, you have 275 roommates, right? That you can engage with, and you can engage and have a conversation with at any time. And so that's really most co-living it adds smart tech, and then maid and yard care, and then usually some sort of engagement and community events.
So most of the engagement, I'm assuming it's online, right? I mean, because you've got single family homes that might be blocks or even cities apart from one another, whereas maybe a more like an apartment complex where you've got 100 units right on top of each other, where they can have those mixers and things of that nature. So have you found that to be widely accepted, these more, virtual events?
Yeah, that's a good question. And, we actually did, we were in 2019, we were exclusively located in Kansas City. So we did a lot of in-person events. We did like bottomless mimosa brunches. We did like an in-house open mic rock show, which we actually had like 85% attendance, which is pretty cool. Just to have that kind of engagement. And then obviously COVID hit and we switched to online, and now we're in multiple cities across the US. So online works a bit better, but we are starting to kick off our in-person events soon. In terms of online events, yes, it's harder. Definitely harder. There's a lot of people that have Zoom fatigue. They've got a lot of online things happening already. But yeah, it's still fun. It's still a nice offering. We do like photo contests and things like that. That's what's happening. One of the things that are happening this month.
Your model itself, HomeRoom, so you guys are actually purchasing these single family homes, correct? You're owning them outright. You're not just renting and then subletting those?
Actually, we work with investors to buy the property. So we partner with single family investors, sort of like a turnkey investment provider, and we help investors buy the properties. And then we help the investors set it up, and then they would yield from like the increased rent that comes with co-living. Okay,
interesting. And then the co-living model itself, what's the typical lease term? Are these units furnished? Are utilities included? Just from a higher level, what does that look like?
Yeah, co-living more broadly, it can be all over the spectrum. We actually have a separate fee for utilities. It's a fixed $140, so that's convenient. You don't have to worry about, when you move out, there's no utility bills chasing you down the block. In typical roommate situations, like I remember in Austin, like calling my old roommates, like the water bill came in a month and a half later. Now we need you to pay like $75 more. Yeah. So that's handled. In terms of lease terms, the average stay at HomeRoom is 13 months, and we do all the way down to 3 months. So we do like a summer internship, but it goes all the way up to 24 months. And usually the longer you stay, the cheaper it'll get with us. And that's pretty standard across most co-living in the United States. In 2018, there was a lot of folks that were doing per day and per week, per day options. And COVID kind of showed that wasn't as ideal of a model, so that most co-living operators have trended away from that.
Got it. And then, so you work with the investors. Help me understand. So are you partnering in the ownership of these homes? Or are you just the platform that ultimately allows that investor to maybe make higher than average returns on that home versus, with the co-living versus if they were just renting it to a single family?
Yeah. So we're the platform, right? So our goal is to over time become similar to an Airbnb, but for the co-living space. That's really our focus. And so we do allow people to list on our platform. We also allow people that, obviously I said the turnkey provider for investors. With co-living, we can get, up to 70% more in a single family home versus if it's just being rented as by one person. So that extra revenue allows investors to make quite a bit more money.
Do you have details that you could share, maybe a case study? So, 70% more, meaning gross, but then obviously you got some other expenses associated that might not exist with, with that of a single family versus a co-living type arrangement. But what is the average increased return look like? If an investor would have normally expected maybe a 10% return on their capital with a 3-bedroom, 2-bath in Kansas City versus it being put into a co-living type model run by a platform such as HomeRoom, what might they expect then? A true return on their investment, net return on their investment.
Yeah, so it depends on each individual property. Just like there's some properties that are really great for short-term rentals, and then others are just not that. It's not that much of a benefit in terms of net revenue. But a really perfect option would be a property that we converted into a 7-bedroom in Kansas City, and it was renting for $1,650 before the investor with us bought it, and we got the total rent up to about $2,825. And so HomeRoom we have 2 options. We guarantee rent if you want that, in which case, the guarantee is a bit lower. But if you go with our revenue share model, which gets really similar to a typical property manager, we don't charge a lease up fee and we just charge 15%. So you get 85% of that $2,800. So so your cash on cash returns start to get in the low teens, and then your return on investment gets in the mid-20s.
Got it. Yep. What are some of the downsides? So we're talking about all the upsides for the investor, to put into a co-living arrangement versus an individual, maybe family renting it. What are some of the downsides? I guess if there are any.
Yeah, I mean, just like short-term rentals, to set up a property for co-living, there are expenses that are incremental that you wouldn't have to pay with a single family rental. A single family rental, you just get the property, make sure it looks nice, and you're done, right? You just find the tenant and take it from there. With co-living, there's more of there's a layered approach that's very similar to setting up an Airbnb. We ask the investor to furnish the common areas, and occasionally we look to convert extra spaces into conforming bedrooms. So those 2 things can end up costing between $5,000 and $15,000 out of pocket in addition, and that sort of matches what you'll see with most larger Airbnbs as well. And so that kind of can be a bit of a hurdle for some investors, is you're investing in this model in which you have out-of-pocket expenses. Now you make that money back quite quickly, with stability in the property, but it's still, some investors prefer something that's a little bit more vanilla versus something pushing the boundaries a bit more.
What are some of the elements that make a perfect home, or a home that's perfect for a co-living type arrangement? I mean, close to a bus line, close to a downtown area. Like, what are some of the main ingredients that make a good home versus a home that wouldn't be a very ideal fit?
Yeah, so there's a number of criteria that are the most important. One is parking. So we think that the co-living model is actually very healthy for neighborhoods. You basically take. And we focus on less dense neighborhoods, typically in the suburbs, and having younger folk in those neighborhoods, we think is healthy. It's a good environment. We actually had one of our tenants saw an older neighbor had fallen down. He called 911 and saved his life. So having a bunch of young people in a neighborhood, that's just one example, but is good for the social scene. It's good for kind of a lot of different pieces. But in terms of what would make a great home is a bit more size. We really want parking in front of the house, right? So we don't want to have to park in front of neighbors' houses. We want the neighbors to actually be happy that there's a number of young professionals living in the house. The other thing is shared showers. We really want people to not have to wait in line for showers if they have to go to work. And then the third thing is we typically don't do HOA neighborhoods. We find that HOAs can be very restrictive and aggressive at times. Not good for short-term rentals, also not good for co-living.
Got it. Talk to me about HomeRoom. How do you guys plan on scaling the business? Like, what's the next couple of years have in store for the growth of your company, and ultimately, how do you comparing it to like an Airbnb model? I mean, what does that look like? How do you gain that traction? What's the plan here for the coming years?
Yeah, so we have multiple approaches to scaling, and that one is working with investors to buy the units. And we see that as sort of a template for this is what a great co-living house looks like. We'll do a Matterport, we get it professionally furnished as part of the investor package. And our goal is to use that as a land and expand strategy in all these various cities throughout the United States and eventually beyond. And then we start to market to other people who already have homes and say, hey, you can make more money with co-living. So that's sort of our approach. We're looking at, this month we're adding, 50 co-living beds, but our goal by the end of the year is to be adding 4 times that. So about, 200. And from there, we're just looking to grow very rapidly. We have some angel investors that are looking to see us, at 10,000 houses over the next 3 to 5 years. So that looks at the 750 cities in the United States above 50,000 people. We think we can be in every one of those.
Are there any big competitors, that are utilizing your similar model in the single family home space that you're up against?
There are two specifically that are close. We have nuanced differences in the way that we target the market. Pad Split is out of Atlanta. We really like that company. They're really focused on they actually don't do credit scores. They're very focused on providing hyper affordable housing for people that are having trouble getting housing at all. Right. So we're more targeted on young professionals. Our average credit score is like 715. So just a different approach there. So we're actually both in Dallas, and we aren't in the same neighborhoods at all. Okay. And so we think we can coexist with Pad Split wherever we go. And then Bungalow is another operator out of San Francisco, and they are in the hyper expensive cities, San Francisco, New York, all those. So they're doing a higher end approach than we are. I'd say we're in the middle. Bungalow's above us in terms of like price and every features and amenities, and then Pad Split's a bit below, and then we're kind of filling in that middle ground. So we think there's enough room in this market for all three of us, and we're all kind of attacking at a different angle.
Got it. What haven't I asked you about co-living that you feel it's important for our listeners to know?
How does it compare to short-term rentals and midterm rentals, and where does that play? And do we see it as an asset class? Is something I like to talk about. And one of the things that we see with the co-living model is that it's the most stable of all the offerings.
From an investor's perspective.
For an investor's perspective, because what you're doing is you're actually creating the advantage of having a multifamily property in a single family space. We've actually, in the history of our company, never had a complete vacancy of a house. The most we've ever had is 60%, 40% vacant, right? So 5 rooms, at least 3 have been occupied at all times. So we just never see that $0 a month compared to short-term rentals where there's massive chunks of zero, and compared to short standard rentals where there's, once every year, 2 years, there's a big zero there and maybe a negative to do some work. We think co-living is going to be one of those. Over time, we think the yields are going to go down because we think it's such a consistent model that you should probably get less yield. But right now it's actually way higher. So we think from a risk standpoint, co-living is killing it. And we think that it'll be one of the better asset classes for real estate investing over the next 2 to 3 years. We think over time, we're seeing a lot of institutions enter the space. Cushman & Wakefield is very bullish. It'll become more and more established, and then yields will gradually go down. But people getting in at this phase will probably have an advantage.
Yeah, it's interesting when you really compare it to a short-term rental like an Airbnb. You're right. I mean, the reason why one would choose to Airbnb their home versus just rent it to a single family or single individual is the increased revenue, right, from those those multiple stays. And ultimately, you're almost achieving a very similar thing, but with a more stable clientele, without the highs and lows associated with seasonality or pandemics or things of that nature. And
the level of work is just, we have stabilized single family homes with 6 tenants in there, and we don't talk to them for a whole month or 2 months sometimes, just like a single family rental where there's just not much to do. But that's not really something in the short-term space you hear about. Like, people are like, yeah, I just put on cruise control, I didn't do anything, unless you have something like Vacasa where they're actually actively managing it for you.
Right.
So it's a low touch, higher.
Lots of moving parts in the short-term rental business.
Lots of moving parts.
So I know, like Airbnb, they face different municipalities across the country, like, regulatory smackdown, I call it, where the city or the local governments come in and basically said, no more Airbnb, no more short-term rentals, like a month minimum or something along those lines. Are there any regulatory risks that exist today that have presented themselves as it relates to the co-living model?
Yeah, so that's an interesting question. We don't have something similar to the short-term rental. Like, you have, some cities like Austin, you have to get approved specifically, and they only allow so many short-term rentals in the city of Austin, and that's growing and it's becoming more intense. That doesn't exist for co-living. It's their long-term tenants, right? The shortest is 3 months, but typically, like I said, it's over a year.
Okay.
So the one thing we are kind of mindful of is occupancy laws that are local. That's something that's a little interesting, and we try to be very mindful of those and be aware of like what the city requires in that way. So,
okay, good deal.
Yeah.
Well, John, anything else that we might've missed on, my friend, regarding co-living?
Yeah,
I think we hit a lot.
We did. We did indeed. No, I don't think I have anything else actually. Yeah.
Okay. Well, for the folks that have an interest in learning more about you and your company and what you guys have going on, different services that you offer, where's the best place to find you?
Yeah. livehomeroom.com. You can explore what we do there. You can reach me personally at johnny@livehomeroom.com, and I'm very responsive by email and happy to talk co-living or house hacking, roommate living with anyone that's interested.
Okay, awesome. Well, Johnny, appreciate you coming on. Appreciate you sharing your experience, and good luck with the growth plans for HomeRoom. And
thank you so much.
Yeah, absolutely. It's been a pleasure having you guys. That's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bubb, wishing you huge success. Take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.